This week, there's some pretty big news in the portable toilet industry. The biggest porta potty and site services company in the United States filed for bankruptcy. It's not often that a move this big happens in our industry, so in today's video, we're going to talk about what happened, why it happened, and what we can learn from it as operators. It's also starting to rain, so we're going to bring the rest of the video inside. So on December 29th, United Site Services filed for Chapter 11 bankruptcy. They own over 350,000 portable toilets and employ over 3,000 people. They operate at a scale that most of us can't even imagine. They handle some of the biggest events that happen across the US, like Burning Man, EDC, and Outside Lands. Usually between Christmas and New Year's, that's the slowest time of the year for us, so what better time to talk about it than now? Really quick before we dive in, let's talk about what Chapter 11 bankruptcy really means. Unfortunately, it's not a liquidation, it's just a restructuring. Chapter 11 is known as reorganization bankruptcy. The company gets court protection while it takes its time to reorganize its debts and also continues operating. This is very different from Chapter 7 bankruptcy, where the company ceases operations, shuts down, and sells off all of its assets in order to pay its creditors. USS plans to wipe out over $2.4 billion in debt and reorganize themselves underneath new ownership. Now, how and why did this happen? USS has been owned by the private equity firm Platinum Equity since 2017. They built a huge business fueled by acquisitions, which is a very common playbook in the private equity world in order to generate faster returns. If you've been in the industry a while, I'm sure that you've seen at least one of your competitors get acquired by United. And usually that's a good thing for us smaller operators. And in this process, they built up a lot of debt on their balance sheet as they continue to expand. Over the past few years, we've seen operating costs skyrocket. Fuel, insurance, cost of equipment have all gone through the roof, and rates for our services haven't kept up at the same rate. This year, we've also seen a big slowdown in construction. Big projects have been paused or delayed or even canceled altogether. When you add this together with billions of dollars of leveraged debt, something was bound to break. USS started to struggle with cash flow and started skipping interest payments on their debt, and that's what's led us here. We're still finishing moving into our new yard, so this is going to be my makeshift chair. So what can all of us smaller operators learn from this? Number one, leverage growth can look amazing when the market is strong, but it becomes risky if the market shifts and there's a slowdown. Before taking on too much debt, make sure that you're able to service it even if you come across a slowdown in business. Number two, a company as big as USS can't pivot as fast as a small to mid-size operator like us. We have a lot more flexibility to trim our costs and adjust our routes. It's important to know your numbers, your costs, your margin, and your break-even point. If something starts to move in the wrong direction, you need to make sure to fix it before it becomes a problem. And number three, don't become too dependent on one type of customer. Build a good mix of customer profiles in the construction and event industries, and also in municipalities and government contracts. That way, if one market starts to cool, your business doesn't come to a halt. Let's also talk industry impact. In USS's press release, they stated that they're going to continue servicing their customers through their bankruptcy proceedings and continue operations as normal. Even though when you hear bankruptcy, it sounds doom and gloom, this isn't the end of United. They're looking to decrease debt, increase capital, and stabilize the company. However, there is uncertainty, and lots of times, clients don't like uncertainty. That provides an opportunity for small operators like us to provide the stability that they might be looking for. Once their restructuring is complete, it's possible that United might be more competitive than ever. They're gonna have more capital at their disposal than I could ever dream of. In order to return to profitability, it's possible that they're going to be more competitive on pricing than ever, they're going to renew their equipment, and they might even enter new markets. Does that mean us smaller operators are doomed? Of course not. There was and always will be room in the market for small operators like us. At the end of the day, there's still a huge corporation, and we need to keep focusing on our advantages to set us apart. Here's some of my advice for you. First, be easier to reach and faster to respond. At United, everything goes to a call center and they're so much slower to respond to requests. Second, focus on doing a good service and on your reliability. Customers who value a good service will stay with you even if it costs a little bit more. And third, build relationships with your customers. Every conversation doesn't have to be transactional. That way, when United comes calling, they're not even going to answer the phone or think about switching. Remember, our good service is what keeps us in business. Now it's time to lock up and get out of here because it is New Year's Eve. Shut everything down and we'll be back next year. And remember, USS isn't gone for good. They're just restructuring. For us smaller operators, it's an important reminder to be smart financially, diversify your customer base, and do a good job on every service every day. If you found this video helpful or interesting, please remember to like or subscribe. And if you want even more Porta Potty content, join my mailing list I'm gonna put in the description below. Thank you for watching, and I'll see you next time.